Many people think that forming a business means they need to form a corporation. That is not true. The fact is that corporations are hugely beneficial to a small subset of business founders, but to others, they are probably not a good fit at all. In this video, we're going to cover how corporations work, the administrative complexity involved with them, the benefits, and there certainly are some, and then the disadvantages, which there's certainly a heck of a lot more, in my opinion. We're also going to talk about how they differ from LLCs, and there may be a way for you to get the best of both worlds. I'm Jonathan Feniak. I'm a Wyoming, Colorado licensed attorney with expertise in asset protection, privacy, and starting and running companies. My experience spans almost 30 years, from operational experience to business experience, running companies, to financial experience, investing in companies, and then the practice of law focused exclusively on asset protection, privacy, and helping you make the right decisions for your company. The two primary types of entities people form are corporations and limited liability companies. The goal here would be to talk about corporations in comparison to limited liability companies and help you determine what's right for you. Both offer the owners of the company limited liability, meaning that they generally won't be held personally responsible for the debts or liabilities of the company. Corporations are distinctly different from a limited liability company in that a corporation has three levels of control and ownership. So we start out in a corporation with the shareholders. They have a financial interest in the company. They're the ones who are entitled to a profit distribution, a dividend in a corporation, we often call it. They also have a limited power to direct the company, but not directly. It's sort of a representative system of government like we have in the United States, where we elect someone to then do what we think is going to serve our needs. Those are the board of directors. So the shareholders elect the board of directors, and the board of directors are responsible for making the important decisions about the company's direction. The board of directors, though, does not carry out those plans. That is carried out by the officers of the company. So we've got shareholders elect the board, board appoints or hires the CEO, the presidents, the CFO, the general counsel, all of those positions within the corporation, and then they carry out those directions that the board determines are best for the company. And so with these three levels, it's really interesting because most corporations, right, you want to have a CEO who is separate from the shareholders. He or she may be a shareholder, but they may not own all of the company. And that's where corporations really are powerful. When you're going to have a diversity of ownership, you want oversight as an investor in what the company is going to do. That's where your board of directors comes in. And then you want competent individuals to carry out those directions that the board establishes. That is the core of a corporation. Just quickly, LLCs, you could have only one layer, a member managed LLC. They own the company, they direct the company, they figure out what the company is going to do, they do everything. And so you understand, if you are an investor in the company, that may be problematic for you. So that's a big distinction between LLCs and corporations. And now we can get into the details of corporations, what they involve, and then how you would set one up or make a decision that a corporation is right for you. Most of the time, we recommend a limited liability company to our clients because it's a simpler form of entity. It's easier to manage. But there are reasons that you may want to form a corporation. A corporation is great when you have people who are different investors, or the investors are different from the managers. When you need that separation between the ownership and the management and control, that's a great reason to form a corporation. Another reason to form a corporation is if you have great plans to grow the company. If it's just going to be a small business for you and a partner, then an LLC is probably appropriate. But if you're going to go that startup route, you're going to raise capital, you're going to go on road shows, you're going to apply to incubators, that's when a corporation is likely not just recommended, but mandatory. So corporations really are more complex. And if you need that complexity because there's certain things that are going to happen in the future of the company, that's when a corporation can be a great choice for you, your partners, the founders, and investors. You form a corporation by filing a document with the Secretary of State. That document is called the Articles of Incorporation. It looks like a pretty simple document, right? Couple of lines, company's going to do this, company's going to do that, this many shares, preferred, da, 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 da. There are some important choices to make there. Right? The level of complexity of that initial articles of organization really can make things easier or harder for you down the road. And so it's not a small decision. You can do it yourself, but we don't recommend it. We recommend that you hire a professional firm such as ours to assist you with filing those articles of incorporation. So you better understand each of the elements that are included in those articles of incorporation, and you make the right choice. So even with that complexity of making the right decisions in those articles of organization, choosing the right share structure, and so on, that's just the first step. The next step is, how do you manage this thing? So the first thing is you need shareholders. Who owns the company? And so shareholders need to subscribe. They need to buy their shares or be given their shares. The founders, if they're contributing money into the company or they're contributing their intellectual property or maybe just time, they have to subscribe for the shares, sign off on it, right? The shareholders then vote for a board. You need to have meeting minutes, records of that shareholder vote appointing the board. Each individual member needs to accept that position, understand their obligations, understand the potential liability of it. Then I'm going to carry out the goals of the board. The board needs to meet. They need to figure out what those goals are, and then hire officers of the company to go and carry those things out. Documents, shareholder vote, shareholder subscription, board meeting vote, board appointment, officer appointment, direction of the company. That's where you run into the problems of corporations as well, is that the expectation of the records of a corporation is much higher. LLCs, especially in certain states, Wyoming with a close LLC, the record keeping obligations are very low. But with corporations, you do need really substantial, solid company records kept in the course of business that really identify everything going on with the company and all of those different things I talked about. So now that we have the shareholders, we have the board, we have the officers who are going to carry out the plans, and an EIN for the company. Well, the shareholders don't have the authority to obtain an EIN. Officers do. So the officers will be the ones who obtain the EIN, and then opening a bank account, right? Signing up for services. Who has the authority to sign on that? The officers of the company have the authority to sign on that. So you still have all of those things that need to be done that really are required to carry out the activities of the company, but you need to take these preliminary steps to even get to that point. How does a shareholder, if there's no one in charge of the company at the time of formation, how would they do that? Well, a board of directors, an initial board, is appointed by the incorporator. We serve as the incorporator of your company. We file the document, and then the person who hired us, we appoint them as the initial board. Then they have the authority to do those things. All right, we can get those people to subscribe. It may be the same people. We can appoint our officers. We can do those things. But then there is going to be a period of time, according to the bylaws of the company, that board members actually need to be voted on by the shareholders so that they have the true authority to go and manage the company and make those decisions to hire officers and the like. So with those three layers, shareholders, board members, officers, question often arises, do they need to be different? The answer is no. So I could form a corporation today, just me, John Feniak. Hi, how you doing? I'm the initial board. The incorporator appoints me as the initial board. I subscribe as the sole shareholder. I own 100% of the company. I appoint myself. I think I'm pretty good at it. I'll be the board on the board of directors, chairman of the board, and then I'll appoint myself as the president of the company. All right, so I can be in all of those positions. There's no prohibition against that. It sounds like then it'd be easy. I've got me, I'm the shareholder, I'm the board of directors, I'm the officer. I can just do whatever I want. True, you can, But, if a tree falls in the woods and no one's there to hear it, did it make a sound? If you, as a shareholder, officer, just did all these things willy-nilly and there's no record of it, did you actually take a corporate action? Prove it. Prove you took corporate action. Prove this was an authorized activity of the officers of the company when we have no vote from anyone else. There's no record, right? And so with a single owner, board, officer corporation, that's what I was talking about earlier, right? A lot of paperwork, a lot of headache and hassle when you're having a conversation with yourself that's taking you away from really guiding the company, growing the company. Limited liability company, especially that close limited liability company available in Wyoming, statutorily, you don't need to keep any records. No, the meeting, it doesn't matter. The meeting was held, wasn't, you had a thought in your head that qualifies as a meeting with your a close limited liability company in Wyoming. So that's the reason why if it is that example of the same person being the board member and officer, do you really need the corporation, or would you have been better off with the LLC? Many of our clients worry about making a wrong choice at the start. They worry that if they form an LLC and their plans, they may have plans to grow the company, to really be that startup culture, to get the investors. And they worry there's going to be something that they ruined, that you can't go back and change it. That's not the case. Business structures, the secretaries of state and laws are structured in a way to afford you flexibility. So you really don't have to worry there's going to be some fatal flaw. You can form your company as an LLC, and then you can convert it into a corporation. You're not giving up anything. Conversions are really not that hard, right? You start out, you would have filed your initial paperwork to become an LLC. Then you make that decision. You file another document. Articles of conversion then allow you to convert your company, your LLC, into a corporation. Then you have to go and you have to do all those things, right? We've got your details of the articles of incorporation and the appointing the board and doing all of those things. But the conversion itself, not that complicated. There are some other things you may need to do. Depending on the original LLC, you may need to also make some tax changes to the company. Limited liability companies are typically pass-through companies. All of the income shows up on the tax return of those owners of the company. But typically, a corporation is treated as a C corp. It can also be an S corp. There's some change. There are some choices you can make with regard to taxation, but generally, the default designation for a corporation is going to be a C corp, and a C corp has to file a Form 1120. Okay, and so you need to let the IRS know, hey, we are changing this company from an LLC to a C corp, or from a disregarded entity, or from a partnership to a C corp. You got to let the IRS know. And again, adding more complexity. You don't need to do that, right? You can actually, an example I use is, it's like a menu. You go to a menu and they say it's a fixed price menu, and they say pick one item from column A and one item from column B. You could choose entity type, column A, tax treatment, column B. They're decoupled. State level entity type, federal level taxation. But this is one of the considerations that you're going to need to make as you do that conversion from an LLC to a corporation. Another complexity of corporations are taxes, right? So if it's just me, I have an LLC, disregarded entity for tax purposes, it all shows up on my personal 1040 form. If I formed a corporation and I'm a C corp, so corporation is entity type at the state level, C corp is the default tax status of a corporation at the federal level, then I need to file a Form 1120. It's a complex form, right? Corporation and corporate taxes are complicated. There's a lot of other things related to the tax policies and tax treatments of corporations that you really need to think about. You're going to need really good books and records, and you're also going to have to most likely pay a professional to prepare that C corp tax return for you. Whether it's LLC membership interest or shares in a corporation, you can generally transfer them to other people. Sometimes the company issues the shares, creates new shares, and sells them so the company receives the money. But it's also possible I could sell my shares. I own 100 shares. I want to sell 10 shares to my brother-in-law. He gives me $10 for it. Completed transaction. LLCs are the same. The company can issue new membership interests to additional partners. You want to bring in a new partner. Okay, partner, if you give the company $500 you're going to now be a partner in the company, or I could sell my interest to somebody else. Generally, limited liability companies, sort of the strength of them is that you can impose some pretty aggressive or interesting restrictions on that transfer. You could say, you're not allowed to transfer your shares to anyone else. Even though I love your brother-in-law, you're not allowed to transfer the shares to him. You can only transfer your shares to another partner, or another partner gets right of first refusal, right? So they get to say, if you want to sell, you have to offer it to me first. And then if not, maybe you need to get my approval to sell it to somebody else. So membership interest in limited liability company, transferring them for a variety of different reasons, you can impose some pretty strict rules on that. Now, corporations, generally the shares are going to be freely tradable. There could be some restrictions on it, maybe prior approval, so on and so forth, but they typically are not going to be permitted to restrict your transfer of those shares to somebody else, right? For dollar value, they're not going to be able to. Or even a situation where there's a court that's ordering the shares to be transferred to a creditor, to an ex-spouse, those kinds of things, you're going to have a pretty tough time stopping those kinds of transfers from happening with a corporation. So with LLCs, a lot of restrictions that you can put in place, and they're going to hold up to whether it's the court doing it or a creditor doing it or otherwise. With a corporation, generally those shares that could end up in the hands of someone you don't want to be an owner of the company. So that's something really to think about. We recommend that if you're thinking about forming a corporation, you do your research, you think about what I've said here, and if you're not sure, or even if you are sure you want a corporation, I highly recommend you talk to one of our attorneys. Get them to weigh in and make sure you're not going to be getting in your own way with administrative complexity, but really focus on running your business.
Corporations do offer some great benefits, and for some companies, they're almost mandatory to have one. But for the majority of companies, they're probably not a good fit. So what do you do if you want to protect your assets, but you don't want the administrative headache and burden associated with a corporation? If you're looking for something that's more flexible, simple to manage, and easier to administer, then watch the next video.